And at any point of time, let's say if I start with 10 tabs today, I will always end at 50.
Oh.
It just never ends.
I'm feeling physical pain right
Yeah.
now.
That's why rabbit hole. That's why rabbit hole.
That's a rabbit hole. Hi guys, welcome back to the Synapse Pod. We bring you today episode 20 of the pod. We bring to you the latest in tech news, discussions, ideas, brainstormings, and a lot of wealth creation. That is the topic for today. We have full house today. Paras is here with us. Avinash is back. Ayush, and guess who's back from his trip from USA?
Yo!
Manik in the house. Welcome
Great to
sir.
be back.
Perfect. So, guys, today what we discussed was since we have been traveling to a lot of places in the past couple of months, and a lot of new ideas of new asset classes have come about. So, we thought we'll just discuss today about wealth generation as a topic, and we'll actually deep dive into it. We'll discuss on more ideas on how being wealthy is different from just being rich. And you feel free to take some ideas from this, but know that any advice here given is a non-financial advice. So don't hold us against it, just in case it doesn't work. But these are just ideas what has worked for us in our lives and can work for you as well. Perfect. So we'll start with Paras today, as a change. Paras, what do you reckon by this word wealth? And versus rich, what do you think is the core?
Was Rich Dad Poor Dad the first book that you read and told about?
Yeah, I was the first one.
You were the first one to
spot it.
Yeah. And Psychology of Money.
Yeah. So I have a thing that any international book that gets published in Hindi, don't miss that book. Because it's the knowledge that has transcended through languages. And it is not biased from the culture,
Yeah.
right? Clearly Hindi people is connecting to it. But it was written abroad somewhere. So I read that book, Rich Dad Poor Dad, and was very, very inspired by it. It was a way, it talked about money from a very, very fundamental POV. Of course, then later we interacted with Naval also. Not interacted as in we saw his videos acing. But so if I have to talk about what my takeaways were from Rich Dad Poor Dad especially, were that is a person can be rich by having a lot of money, and probably a wealthy person is someone who has assets that make money for him or her. Like, these are two very different things. I can rent out my time and make a lot of money and I can be rich, but I'm wealthy only when there are some passive assets in my possession who keep making money for me, which help me lead a life full of choices. So if I have to summarize, what does wealth do to you? It unlocks a lot of choices. A person can be rich but still not have a lot of choices, right? Let's say if I am a social media influencer who makes money off brand endorsements, that's my sole source of income. Do I have the luxury to go off Instagram for a month? Not really. Yeah. Do I have the luxury of pursuing anything, anytime, anywhere? Not really. Right? I am in a way, and just doesn't apply to that profession, applies to a lot of professions, that we become slaves of our own professions. Wealthy people are not slaves of their professions. So that's how
buying freedom, right? Freedom of
buying
time.
freedom, buying choices, buying time. So that's what wealth does to you. It unlocks a lot of choices, which not necessarily might be the case in a person who is rich, just rich but not wealthy.
One of the, just to butt in, and it's something which I have seen as a kid growing in an army background. Each army family had a book, Rich Dad Poor Dad.
What are you saying?
Is it?
Wow.
All of them.
This book is the most common book. The other most common book is How to Move Your Cheese, and the third most common book is Secret by Ron. Like, just manifest.
What's the reason? Why does it?
It's just so. I think it's also a culture in the people you live with that it's just been so common and so ingrained that most of the people I've been to their houses has this book. And I can vouch for a lot of my friends and across different cities which I've lived in. It's just not like it's concentrated towards Delhi or Mumbai, but across different, even in Jammu, like a small town or Pathankot, I have seen it. And that's my first memory of this book.
Maybe that's why, you were the first one to invest among five of us. You started investing
he started
much
investing
earlier than
first.
than we had got
That's
into it.
I think uncle was the one who was like giving you that guidance, right?
Because my dad and my sister would talk about it, and that's how I would invest.
Yeah. That is true, definitely, that lot of understanding of wealth comes from the family, right? The way your conversation happening in the house.
Yeah.
Yeah, it's crazy that none of our fathers, like 1, 2, 3, 4, 4 of us, have ever invested in a single stock or a share.
Or maybe they have lost, so they haven't.
Probably.
They have heard a lot of bad
But-
stories.
But it was not an active behavior
Yeah.
in the household too.
My mother did actually, as compared to my dad.
Their real estate is the deal.
Yeah.
And surprisingly, a couple of your mothers do invest, right?
Yeah, absolutely.
I invest a lot in shit.
My mother knows a lot of more things than my dad actually sometimes. Whether it's through
Interesting.
the lot of schemes coming from the post office, lot of debt given to each other in supportive way,
Oh, nice.
and of course as a reward you're definitely getting the interest on top of it. So yeah, even at a smaller scale it's happening.
So very interesting. So a lot of knowledge about wealth creation, generation, or spreading comes from familial backgrounds, right? And I think a lot of mindset is also shaped by that on how you use wealth, where you invest, how you view your time as, how you view money as. For example, I've seen a lot of people who have insane amount of money, right? They never talk about money. They never talk about brands. They never talk about things which are flashy. They never play the status game. That's and that's when I realized that real wealth is actually hidden. Where people who own real wealth, you would not even know that that guy is wearing a $600 shirt and he's not even talking about it.
Because what you see are expenses.
Yeah.
Not really
Yeah.
wealth.
Exactly. Exactly. Yeah, and I don't know. I saw this movie couple of months ago called The House of Gucci.
Yes.
And
Gucci.
I could
Gucci.
I could understand the difference of people growing up in wealth, right, and the children growing up in wealth, how they view society or capitalism as versus middle class or low middle class, right? That's a very huge difference.
My favorite part of that movie was when the investors were questioning Mr. Gucci about the expenses that he was doing, whether it was his cars, whether it was his travel, house, or even the expenses on his experiences. And he was telling me that Gucci is a brand because of those expenses.
Yeah.
Because people are looking up to him
Yeah.
and looking at his lifestyle. So
Yeah.
that was such a powerful statement that you will never understand,
Correct.
even if you want to make it.
Correct. So yeah, I remember he saying that you cannot buy a Gucci because you're not born into it. So it's like the ownership of something so precious needs to be
That
handed
was for
down rather
the
than
wife that.
yeah, that was for the wife. Yeah, but insane. So guys, just to be very clear, I want to today deep dive into the mindset of wealth creation. More rather than just discussing the asset class. Hey, you can invest in this, you can invest in that. How should people look at wealth on a day-to-day basis, right? How should you look at money on a day-to-day basis? For example, like I know you go through a very structured, compartmentalized way of looking at wealth generation and many other aspects of life. So why don't you give us some ideas or thoughts on what is your outlook towards it? How do you view that?
Sure. So, one of the things I also learned from the book called Psychology of Money, or maybe Rich Dad Poor Dad, but the idea was that most of the people see expenses in an equation that is, you get your salary, you do all the expenses, and whatever is left, you save that or you invest that. So that is what a lot of people live by. But what they have changed or brought a different mindset is, you get a revenue or salary, you save first or you invest first, and then whatever is left, you then spend that. So that was the different mindset that
Oh yeah, that chapter was called Pay Yourself First.
pay yourself first. Correct. So that was one of the things that stuck to my mind. which helped me structure my expenses. It helped me structure my investments. I mean, I was paying myself first, like shortening my short-term gratification, like holding my short-term gratification, and having a view of a long-term gratification. That is, investing and saving today to have a better output in, let's say, 6 months, 1 year, or maybe 10 years from now.
Yeah.
So that was one of the mindset that was changed because of that book or because of the article. So that is how I also structure my finances, and yeah, I mean that's been working.
So one of the, just adding on to it, it's something which I heard Charlie Munger speak, and he had given out a whole speech on this, was that how people started investing earlier, because they were asking how people are investing earlier and how they're saving, and this thought process is quite prevalent, and a lot of companies have come on this. And he said most people don't invest in themselves, in the sense that they're not putting or getting the expenditure on the experiences,
Yeah.
on travel, on or upskilling themselves, which matter a lot more than investing in a stock market right now.
Sure.
So he said in your 20s, you should be, even Gary Vaynerchuk, I think, he also keeps up,
You will say that.
Yeah.
just to put that money on yourself, to invest on yourself. And that could just be me, hey, I'm going to take this course, I'm going to learn, upskill myself, and be a great designer along with being a good content writer or like a coder.
I want to bring up 2 points on this, specifically the wealth, how I look at wealth while growing up. I think 2 points are very important. Every time in my discussion used to happen at home, there was always profit and loss. That was the first paramount discussion, that what's the point of doing it from the PLN statement. Second was, money should never be stuck. Like, I think that idea that having money standing was such a stupid thing. It used to be like, for me, cash flowing was obviously the first principle, that money should not be stuck, it should be put out as soon as it comes in.
Deployed somewhere. Like,
It should be put to work.
yeah, it should be put to work. Like, it was the obvious thing for me. So I think that's one of the point that for me, I think whether it was giving debt to someone who needs it, and sometimes giving out debt not even as a debt, just giving it out. So as a collective sense, you want that people should be making more money out of it, because you know that if your people around you are growing, they will definitely invest in you as well tomorrow or support you. This is such a common thing. I think my dad has given out debt to so many people without even asking for interest.
Makes sense.
Because he said that what is it doing at my place?
Makes sense.
If
At least
not-
someone else can
if
put
not
it
a
to work.
job for someone else. So that's a very different
Makes sense.
way of
Oh,
thinking.
this is a new one. I've not heard it this way. Like, I've seen in relatives happening this, that my dad has some money, but a relative needs it, so he'll lend it to him. Maybe at a zero interest if they are too close, but not to normal people. Like,
Yeah, I've done
that's crazy. Wow.
That's insane.
That's like a different POV on money entirely.
Yeah, exactly.
It's a collective
Yeah,
social
yeah,
thing.
It's a very different.
That it's in a way, what I can hear from this is that it's a disrespect if the money is lying idle.
Yeah.
Like, if you don't know how to use it, might as well give it to someone who knows how to use it. So maybe they can make something out of it and pay you your money back.
So coming back to that point, so by this analysis and what you guys are saying, savings is a disrespect to money unless those savings are invested.
Oh,
Is that correct?
Of course.
Because of the inflation, your money is going to get devalued, right? So I mean, the value your money holds is going to go down because everything else is going up, right?
Yeah.
So the purchasing power of your money, if put in a bank account, is decreasing until unless it's put into, let's say, a bond or in a safe instrument. Even if you want to save in an instrument that can beat inflation.
Yeah, so what Ayush technically you want to say is that, let's say inflation is at 9%, and if my savings account
Is it 5%?
or FDs, fixed deposits, are not giving me more than 9%, I am on a progressive basis year on year losing value of my money.
Losing value, correct.
Right?
2%.
Let's say if the deficit is 2%, then my 100 rupees becomes 98 rupees.
That's
Yeah.
one POV. Other POV is that what you could have bought at 100 rupees now will be available at 102
2 rupees.
Correct.
So technically you are just left with 100, not 102 anymore.
I think what creates a lot of fear in people's mind is depletion of their bank account rather than saying that I can buy the same amount at
Yeah, for sure. Correct.
Oh, I'll tell you one out of the way thought process that I could never see. So I was traveling in Germany, and he was a local born and brought up there, and he told me that the demand of things increases when people know the recession is coming. I was like, what? Like this was so mind-boggling. Otherwise, the point is recession is coming, so people will hold on to their money to save it for the bad days. He's like, you start to spend because then there will be no more spending happening.
Wow.
I was like,
The
wow.
value of the thing is gonna increase.
Oh yeah,
right
that's
now,
what I mean, yeah.
right now if the car is costing you, let's say 10 lakh, it's gonna cost you 15 lakh, let's say in the coming year. So that's why you spend now. So the
Of course,
second is
but what
coming,
do you
you
invest
spend
in?
it now.
Makes
So
sense.
that was quite so there were a lot of cultural differences
Cultural
there
difference, yeah.
of looking at money.
It's interesting. Going back to what Manik was saying, like learning, investing in yourself, right? That mindset of money, I think that is a fantastic point because I used to the teams that I run, I always tell them that this concept, and it's actually in one of our core values also of company we run, which is hyper learning. So what I used to always propagate is, and I don't know if I've shared this with you guys as well, is maximum learning on a certain topic to reach 70% of the proficiency in that topic in a 3-day period of time, which involves 14-hour sprints, 12 to 14-hour sprints. Let's say tomorrow if I have to learn about piano, or I have to learn, let's say, C, or I have to learn Solidity for crypto, I will do 12 to 14-hour sprints over a period of 3 days and then leave it. And then reconcile all my knowledge. And for the next 2 weeks, I will just talk to other people who may have been more proficient in that particular skill. So a mixed bag of theoretical and practical leads to massive ideas about a certain topic. So and we actually term this as hyper learning, where you're literally just gulping every information. There is a lot of input instead of output in those 3 days period. So that is something which I also try for the new things that I'm learning. I would go all in deep dive and not surface level. If I find a certain topic, then I would read about that topic and I will click on every single hyperlink in that article on that topic, and then it actually takes me down the rabbit hole.
Yeah, it becomes a learning tree.
And at any point of time, let's say if I start with 10 tabs today, I will always end at 50.
Oh.
It just never ends.
I'm feeling physical pain right
Yeah.
now.
That's why rabbit hole.
That's a rabbit hole.
Yeah, I mean, let's just not go how many tabs are open on our laptops. Right
Yeah, I
now.
mean, I'm just thinking, I'm just talking about the tree of knowledge
Yeah,
connecting
yeah.
around to every topic that you can explore on a particular stream. So that is one thing which has really helped.
Another angle I want to bring up about wealth generation is something I read about how corporations are run in Western countries as compared to overall in the world. So I used to hear about companies who has been surviving 100 plus years with no more the founder or the any generation of the founder still working in it. So that used to fascinate me a lot of the fact that how they have created a structure and not on the basis of hereditary but on the basis of skill set.
Capital.
And people are rising from basic level of entry in the organization and slowly rising up. So I think that's another very different angle looking at it, because I have seen, of course there are a lot of big houses in India as well, but I've seen a lot of houses who could have been bigger had died out because of generational issues or a lot of conflicts. So I think the discipline of managing wealth, it's a very common thing, right?
Family run business versus management run business.
Yeah.
Like management run businesses thrive in Western cultures, is what you're saying.
That's true.
Which is less visible in countries like India.
Kind of, I would like to, that's the angle that I want to bring up.
I mean, L&T is the only one which I can think of.
ITC is managed.
ITC, L&T for sure, because it's been a
Banks, you
while.
have banks.
Banks.
Multiple banks you have.
Yeah, banks are pretty much professionally managed.
Let's not call yes bank.
Paris, on this topic itself, I would love if you deep dive onto markets as a concept for whether generational houses or individuals or people working in companies, growing markets versus declining markets. How does that contribute also in wealth generation? And because we've heard stories of Kodak, right? How it went down when Instagram came. They couldn't make the switch from, and it was a huge company, $60 billion, couldn't make the switch from physical photos to digital photos in time. So how does market play play as a concept in wealth generation, even for bigger families or smaller families?
Sure. So, see, this is a very deep topic, but I'll try to summarize it in like as few words as possible. The way I see it is, so I was reading this one book which said if your stocks are not able to, if the company that you are investing in, the shares that you are investing, if their revenue is not growing faster than the GDP of that country, it doesn't make sense to put into that company, right? Because it's not even moving parallelly to the country's GDP growth, country's growth rate. The revenue growth rate is lower than the country's growth rate. It was a good mental model that I got. Now I started bifurcating into two things. You look at hindsight, you look at foresight. When you look at hindsight, you see the track record of a company or a market or a sector. You can look at past 5 years of any such thing. Like for example, if we are analyzing fintech, so we can look at past 5 years of fintech. If we are analyzing just Paytm, we can look at past 5 years of Paytm, and we can make sense of what's the trend line. If the revenues are, let's say, increasing 40% year on year, it's very likely that they will keep increasing like that for the next 3 years also, right? So this is something that you do. Looking at hindsight, you try to predict that whether you are in the right market, are you in the right stock, are you in the right investment, or are you in the right asset class. The other is foresight. What can you see about the future, let's say 10 years out or 5 years out? For example, if I'm investing in a company, let's say like that has no exposure whatsoever with electric vehicles and they are an automobile maker, even if they have a good past record for 5 years, that pretty much gets trivialized, right? Because they are not working on the future. So it has to be the past sort of gives the predictability and the future sort of gives the what do you call it, upside potential of it. Looking at both these things together, pretty much we can analyze any market, any sector, any company, any stock. So that's the mental model that I operate with. So see, one thing I'm a very strong believer of is that we learn the most from stories, right? So I would love to know stories of each of you all with respect to wealth creation, what worked for you and what did not work for you. If you can try to summarize in like 1 or 2 points on each, what worked the best for you, what didn't work at all for you. So your mistakes and your hits and misses, if you can try to summarize one by one, probably that's what viewers can easily remember.
Yeah.
People can easily remember. People love stories.
Where do you start with the winners?
So of course, what didn't work is the crypto. I think when I started investing in it, it was entering into a fear of missing out zone, and like even though the pundits who have known about it are still not able to predict it, so I do not feel that bad. But I think that is the worst investment I have done till date. But I still now, since I've read about it, now I believe in it, so I'm holding on to it. Best has been debt financing, that I have put in my money in giving out debt to people, and been to those people whose background verification I can do. I know that what are their holdings, what are their potentials, what are kind of business model they are in, and able to make a sweet 10 to 12% year on year on that. So do that, the thing that worked for me.
Nice.
Sure, please go ahead.
Okay. So I mean, one thing I learned about before it, I started, I think, late from all these four. So one thing it stuck to my mind again was I was watching this course from Learn app during Corona time, during the lockdown. So one thing it mentioned, the guy mentioned, the founder mentioned that before you start investing even a single rupee, you start building your emergency fund.
Yeah, I was going to ask you about that. You didn't mention it. It's a very interesting thing that you do.
Right.
Yeah.
So I mean, that is something that I started, and I started telling these guys as well. Was that whatever is your expense right now per month, multiply it with either 12, 15, 18 months, whatever you want. Right. I mean, depends on what's your risk appetite, how safe you want to be. And first, save that money. Put that money into a safe instrument, because it acts as an emergency account, emergency fund, which means that, let's say, if you're out of job tomorrow, or you are in a need of money because of medical emergency, health emergency, travel, suddenly there's a big travel that has come up that you need to go for whatever reason, then your day-to-day operations, day-to-day expenses doesn't get disrupted, and you take money out of this emergency fund. So this was the fund. This was the fund I started making in 2019. I completed in the next 6 to 7 months. Whatever I had in mind, I was able to make it. I put it into the same instrument, and it is growing since then. Luckily, I didn't have to dip into it as of now. So it's there. I do not touch it. It's in a different bank account altogether, so that I do not see it as my available fund for whatever reason. So that was one that I started. It is working for me. Second, when it comes to investment, so
What do you mean by it's working for you? Does it make you feel more secure, more
Yeah.
free,
correct.
more risky?
I do not have to do unnecessary saving day on day for Mayday cases because I have emergency fund in place. I can take a riskier bet now because I don't have to.
Fun.
Because I won't have to liquidate my money, which is stuck in illiquid or risky investment
Yeah.
pool, if I want to need some money for some reason. So that is like I can sleep at night properly.
Yeah.
That is one. So what has worked for me, I'll cover 3 things: what has worked for me, what hasn't worked for me, or what I haven't tried yet. So first, what has worked for me is investing in blue chip instruments, be it Nifty 50 like indexes, or blue chip stocks, or blue chip crypto like Bitcoin, Ethereum, or a long period of time. That has always worked for me because I mean so index essentially covers top 50 companies of a country. Be it India, be it USA, I mean they have different indexes in different places, so that has worked for me. Second, what hasn't worked for me is always FOMOing into any asset class, be it crypto, be it stocks, be it debt, whatever. Whenever I FOMO into it, that is buying at the high, I have to spend longer time to hold it to recover the. I do not sell unnecessarily if I don't have to, right? But then the wealth creation time takes longer duration as compared to a properly done investment. So that hasn't worked for me. I mean, I haven't seen any major losses in any asset class, but yeah, definitely that hasn't worked. I haven't tried USA's geography, which Paras and Chirag has been dabbling into a lot.
What have you not done into?
Yeah, that I haven't done. And second, I haven't tried debt finances. That Avinash has tried.
Makes sense.
I'll want to. I mean, those are very different. One is riskier equity, one is safer. But I want to try both.
Yeah, emergency fund is an amazing concept. I mean, I second with that. I mean, if you can disassociate your need to earn from the want to earn,
Yeah.
then it just works.
So every year I have a goal to reach financial independence, which means that I don't want to work to earn.
Yeah,
I'll work because I like to work,
exactly.
and everything else is like secondary.
Yeah.
So
makes sense.
that's emergency fund is a part of it.
Yeah, yeah. I think that is that is essentially the backbone or the spine which every individual should have before they go out into
Put in
thinking.
it even a single.
Exactly. And that emergency fund can be as small or as large as you think.
Yeah,
You
correct.
want
6
to-
months to 30 months, whatever.
Exactly. Yeah. It can be 4 months, 6 months, 30 months, depending on your appetite
Absolutely.
and your risk taking abilities, of course. So,
Go ahead.
should I?
Yeah,
Oh,
absolutely.
Perfect. So, one thing, so I'm a very risky investor, as you all know. I go all
The
in.
riskiest of all of us.
So, I love to deep dive into new things because I've somehow always set in my mind that I do not want to make peanuts out of betting peanuts. If I'm going in, I would rather plan my bets into the most riskier assets which give me a high reward. Once I have the highest reward available to me, then essentially compartmentalize rather than and things have worked out for me. Like what has really worked for me is crypto. Like I've like 10 to 12 x is something which has worked for me in crypto. I think it was about timing when we entered, by how much quantity we entered, and then what we made out of it, and then diversified across multiple asset class. So that worked for me. What has always worked for me is averaging down. I do not average up on an asset class. I always average down. For example, if I take a stock at 100 rupees, as soon as it goes below, let's say 5% of that 100 rupee mark, if it goes to 93, I buy. It goes to 87, I buy again. So and what happens if I'm continuously averaging down? Then on the first instant of it breaking even, I have the opportunity to liquidate. Now it is my choice that I can or want to. So that has always worked for me, and so imagine like I started to enter Reliance at 900. Then at that time I didn't have so much of liquidity. Then entered at 1800, and if you remember, Reliance went from 1800 back to 1200 before it shot down to 2600, 2700. Right? It went through the cycle. I averaged down from 1800 to 1200 every single instant because I knew that I'm more also investing in the government. so I took that bet and that worked out. So averaging now works. Also multiple asset classes I wouldn't always say bet on only on stocks. Bet on risky asset classes, whether it's SPACs, whether it's new blue chip crypto, whether it's NFTs, whether it's risky real estates, where you know that things can work out. DeFi projects, for decentralized financial games. I'm not a big proponent of gambling at all. I would gamble with whatever you can throw away. It's fun money. If you make it, make it. If you don't, do not go on to other people's story that I entered the casino with this and made this amount.
FedEx story.
Yeah, FedEx story. People might be lucky, but know that you are not. So I go with that mindset. So going big and going hard onto risky assets is something which I propagate. But I would also say that people's life situation depends on a lot of other things. So emergency fund is something which is always essential. And one thing which I always believe is never play against the house. And the house is legislation and the government. If you build or bet on assets which are not regulated, let's say in your geography, and I'm not talking about crypto because that's a new world order. For example, if drugs are criminalized in India, cannabis is criminalized. I would never bet on a cannabis startup or a cannabis investment, whatever is happening underground, because that can go boom bust in a day, irrespective of the most lucrative returns. So never bet against the house. So that's just my thoughts. Manik, what about you?
That's super cool. I will go from betting on different things. I think one of the things which we have all missed as we are founders, we have also betted on us. We forget the fact that our majority of our money and wealth will be generated by the equity that we hold in our own companies and our own stock.
Yeah.
So that's where my time has actually gone most of the time, and I bet my time which is left to bet on what I'm going to learn from different things. So I play it safer than most of the guys here. I play it safe in the sense that I only invest in most of the times in the blue chip funds. I don't take that many risky bets, because to take risky bets you have to read up on those risky bets. Do I have the time and the bandwidth to do that? I think the riskiest bet that I'm playing up is on the startup that I'm doing, because that's extremely risky in the sense of making money or doing whatever, because it's the passion that drives us along with everything else. I think and that's where I want to come to, right? Like a couple of my friends, we were having this conversation. We were in San Francisco a couple of years, and we were having this conversation that what's the best way of making money? How are we going to generate wealth? And someone said, hey, let's just start up, right? Like, let's just do this. And I was like, if you're doing it only to make money, I think starting up is one of the stupidest ideas you have. There are better ways to make money. And I'm going to explain it how, as I explained it to a friend of mine, that if you're looking to make money on your jobs and like make tremendous benefits, is to join a Series A startup. Someone where you believe in, but they also have the money to pay you the market salary. So you get
the employee stock options.
Yeah, exactly. So you get the market salary, which is equivalent to what you will get in any of the bigger companies, which is like, but you will also get the employee stock options of a Series A company, which can go up till a Series E or a Series, or even an IPO, right? And that's where you make generational money. Not generational in the sense of billions, but few millions for sure. If you want to be the freedom to do whatever you want, I think that is where you get it to. People who were in the top 100 of Facebook or of Flipkart in India specifically made tremendous money.
Yeah.
So how to be in that is what is important. Can you first see which startup is going to do well? Can you be part of it? So that's where I come in from and say, hey, that is the right way of making money and not starting up. Unless you're passionate about it too, then you should start up.
Yeah.
So that's my idea. But if I'm looking in terms of purely investing, I believe in investing in like one of the asset class we do invest in, but we haven't discussed much is angel investments. We haven't done that many to count a lot about it. And personally, I haven't led any. I have always followed you guys in it. But I think if we do see someone who's doing really great job in the sense that we can help them or understand their team or their vision or the problem solving is something which, so if anyone on the audience who listens to us and has an idea, you know who to pitch, any of us, just hold up us and pitch us.
So basically, what Manik is saying that owning the equity is the better way to make bigger wealth and generational wealth
That is true.
than working or then putting into share
Yeah.
which is already out in public.
Yeah.
Either investing in yourself
Actually,
or by
yeah.
investing in some other company. Owning the equity is what
Yeah.
Manik is trying to
I
say.
have actually advised, I think, more than 5 of my friends and told them to take a salary cut or at least minimum amount so that you get and negotiate your ESOPs. And because in the way that you are giving much more happiness to the founder, because that means that you also believe in this riskier game that they're playing. And
It's just sad that ESOPs is not well understood in India and the laws around it is not the most clearest, so that it's not always helpful for the employee or the employer.
Yeah.
Both ways. It's not that great to
there is a
give ESOP.
confusion, right? That even if you have not made real cash out of it, yet you have to pay a tax on
It's not,
unrealized.
not a confusion, but the legality around it is very shitty as compared to what they're out in the US.
It's the worst, it's a bad law.
It's a bad law.
It's extremely bad law.
Ayush, want you to follow up with thoughts on compounding as a function in wealth creation.
I would love to hear Paras' story before we start with that.
So Paras can touch
Yeah.
on compounding, he knows better.
I know I forgot to tell my thing also about work.
Oh,
yeah.
Worked the best for me. So summarizing it quickly, so what worked the best for me was keeping my burns low. Like my monthly burn is very low. I live at a very, very low spending per month. But what that unlocks for me is that I can have much more fun with the money that I am left with. So around 2-3 years ago, I think I started to see it as a video game, essentially. That if you can detach yourself from the emotion of it, then it's much more fun and probably much more rewarding. Because in a game, you don't want to die. So just because it feels like a game doesn't mean you'll do stupid things. If you're really a serious gamer, you don't want to die. You want to take enough bets to win the game, but also not take that bad bets that you die in the game, right? So I've tried to see it as a video game. I've tried to have more to play with, and then it's like much more fun because then I can invest a little in crypto, I can invest a little in US stock market, I can invest a little in Indian stock market. And one thing that works fantastically for me is that I invest to learn. The moment I put my money anywhere, my incentive to learn that thing is super duper high.
Yeah.
So if I want to learn about crypto, I first put my money, a little money into Bitcoin, and then I'm much more interested in understanding, why the price is going up, why the price is going down. Suddenly, you've invested in Bitcoin, all the Bitcoin news of this world starts
The
to come to
day,
you.
the day when we invested in NFTs was the day when we started learning about NFTs.
We start learning about NFTs,
Yeah.
yes. Even in stock markets for that matter.
For the first airdrop.
No, we didn't invest.
My dad was like, you try out the stock market. I bought 2-3 stocks, did some shitty trades on that, made money on some shitty trades again. And then I was like, I don't really understand what is happening here, so I need to learn. Then I went down that rabbit hole of understanding stock markets of India at least. So I've done this invest to learn, which of course compounds for the whole life, not just for the investment part of it. And other is, like I said, I keep my burns very low, so I can have more fun with what I have. and it just works out much better in that sense. What has not worked for me is giving a lot of time to the act of investing, not learning about the investment. Learning about the investment is absolutely fine, because the moment you are learning about Bitcoin, you are, like you said, you are learning about a new world order.
Yeah.
If you are learning about, let's say, an ITC, you are learning how to build a very sticky business which can operate at very high gross margins. You are not really learning just about ITC that time, right? So there is learning is never bad. But every time that I've invested a lot of time into the act of investing is where shit has happened. For example, if I've tried my hand at trading, I faced flat two ways. A, I don't make much money out of it because things sort of average out.
By trading, you mean intraday?
Not necessarily intraday, but short term.
Short term.
Not one way is now what I do mostly is that I hold on to, I buy, and I don't sell at all. The moment I start thinking, oh, I have to buy, then I have to sell, then I have to again buy it back, all this micromanagement of playing on this volatility of prices
And you have to go full time.
Yeah, full time is an extreme word, but I have to give mentally my
Exactly.
my mind share to it. I get hurt two ways. A, my core work suffers, and B, I don't even make money on the other side. So I'm really a fan of passive investing, and inaction somehow will become your best friend. Like, I don't keep money loaded in my end money wallet. When I see an opportunity in the US stock markets, I then load money onto my end money wallet. It takes 3 days to come, and so many times that 3 days I've changed my decision in those 3 days.
Yeah.
Because I've gotten some time to think about it. I've
Yeah.
seen more data points in those 3 days. So inaction, a little bit delay, just works fantastic. I remember, so Manik and I were investors in Yes Bank, even you were, and the stock price.
I'm still holding.
We are all, it's the most held stock in Indian stock market. Okay, so all of us are holding it at a very, very penny stockish price. Okay, and I was like, Ayush, we've all lost money on it. There is, of course, some hope to it. The management is changing, so why don't you put like a little money of yours? And he was like, yeah, sure, I would rather put at 45 than putting at $12. Because if it manages to reach a certain point, probably I'll have more data points on why it went from 12 to 45.
Yeah.
The idea
Why
is
should I invest on hope right now?
20, not 45, 20.
20, even 20.
As soon as it hits 20, it enters the daily circuit. That
So
was the idea.
That's another rationale to it, right?
That was the idea. If it
So-
can rally from 12 to 20 and can hit daily circuit, then I'll be very comfortable investor.
So, in action, giving less time to the act of investing and more time to the act of learning,
Yeah.
I think that will work very well. For me, every time I've started to give a little more time than what's needed,
Yeah.
it's only hurt me back.
Yeah. I would love to listen to Ayush and Manik's thought on compounding.
Yeah, but before that, I mean, touching on Paras's point, like about the trading, so what I believe is that you can have a profitable trading if you can give your full time and energy to it. For example,
Yeah, absolutely.
for example, I learned about this trader called Cyrus. He trades NFTs. He is a compulsive profit taker, which means he only buys an NFT where he's sure that he'll be able to sell it within the next 72 hours with a profit. And 85% of the time, he's right. I mean, you have to be right 60% of the time, he's right 85 to 90% of the time. He has turned his wealth or money from 0.6 Ethereum, which is like $600 right now, $700 right now, to 1,000 Ethereum.
That's like $1 million.
That's like
Bucks.
$1 million. Over a period of 6 months. I mean, right, if you spend your time in learning a skill and you learn it right and you are a compulsive profit taker, then you can make profit in trade.
Yeah.
Which I think Avinash also told me that he has a relative whose goal is to make money every day.
Every day, yeah.
Fantastic. He books the
Profit every
it doesn't
day.
get greedy.
Correct.
Trading is a skill, it's a profession.
Trading
It
is
can't
a
be your
profession,
side thing.
it can be profitable, you have to put your time, money and skill to it.
Just adding on to this, a very good friend of mine, just every week, every Sunday, he writes a new algorithm for it.
Who's algo trader?
He's an algo trader.
Awesome.
Every week he books profit. Very similar to that. Every Sunday, 4 hours, he will write a new algo because he knows the previous algo is not going to work the next week. So every week he has to write a new algo, and that it's like it's a new maths question to solve.
Yeah.
Yeah. No, I think it all derives a lot from passion, right? And either it can be passion to learn or passion to earn.
Yeah.
And
Nice.
so you choose the place you want to be.
Yeah, absolutely.
Cool. Compounding, you guys were talking about.
Go for it,
Why not?
Ayush.
Why is it become such a passed on topic?
I mean, so essentially what you want to shift from is short term money making
So long
schemes
term.
to long term. How, I mean, mindset again towards whatever. Let's say you are able to do some nice trades, you are able to, let's say, exit a company, you are able to make some money here and there. Now you have the wealth. What do you do now? How should you look at that? Should you just blow it up? Do parties and just let it all go, or pass it on, or save, get into a very pessimistic
I think
mindset.
houses in Bahamas are really.
I wouldn't mind that.
Yeah, $40 million, go to Bahamas.
This is exactly the kind of mindset that we want to discuss on. Where we want to discuss about
There's
compounding.
this called guy called SBF. If people haven't heard.
Yes,
Yeah, we
we've
discussed
covered
that in the last
one.
pod.
I know.
Yeah.
So Manik, so how? So now let's say you have $1 million. What do you do with it? How should you look at those $1 million ads? What is compounding essentially?
Compounding is the fact of letting the money work over a period of time. I think one of the best things which I've read up is basically reading up as much on Berkshire Hathaway and the way these guys have grown. And they've always been on the fact that they will take 3 bets in the whole year. So the whole team is going to invest 80% of their money in just 3 different companies and not touch it for the next 10 years. And make sure that it compounds year on year.
Yeah.
Because at the end of the day, they're believing that the decision of investing in 3 companies and a huge chunk of money and that's how it's going to compound. They don't believe in every week they're going to change it, every 6 months they're going to change it, and that kind of resonates with how I also believe in.
Yeah.
So if I have $1 million that I've won, I'm going to take out different kinds of bucket. There is going to be a party bucket out of it for a fact, because I think enjoying life is giving back to yourself. So if it is through partying, it could be traveling for me. It could be buying a whole library of books. That could be something which I would love to do. But whatever it is, right? Like there's that partying thing that comes out of it.
Yeah.
But the rest of the money gets divided into 4 different categories of extreme risk to blue chip, and how you're gonna take care of all of that comes in between. So it could be extreme risk, could be, hey, I'm just gonna angel invest like into 20 different companies. That's the extreme risk that I'm thinking of. And angel investment could also mean like a new crypto that's gonna come out and you being one of the first early investors in it, or like a SME IPO that's coming in. There could be smaller ways of that, right? Like extreme risky investments. There could be some middle risky investments.
Gold.
Gold. I think that's something which I don't believe that the idea of precious metals, because it was just there for the smallest time. I don't like to invest in things which are just there for the scarcity effects. We think scarcity is there for a reason. It's a man-made scarcity, and as soon as that scarcity goes away, the value of that thing is going to go away. So I don't like to invest which is something in scarce. I like to invest which is something in future. So how is that going to look like? Or how it's going to change different things? If it's just going to be more on the safer options, I'm going to put it in a debt, as you said, right? Like mutual debt funds. I think the easiest way to put in a debt instrument is through doing mutual funds in debt. Specifically government bonds, right? Like I'm not going to bet against the government till the time I think the government's going to fail. But I don't think so. I think the government's got a huge chance and the huge potential in a country. So then I'm going to put in mutual funds if it's a very safe option I'm going after.
Yeah, makes sense. So one thing which I'd like to add on that is once you've taken all these bets, I think inactivity, as Paras said, is your best weapon. You would realize that by not touching the bloody asset class and just letting it be as it is for years and years, you're going to make the most amount of money irrespective if you literally just day trade of that asset.
Exactly. And just counting to that, the richest people in the world are the baby boomers in US, because they didn't sell or do anything with their real estate, and they have worth over $60 trillion, which is 8 to 10% of the overall world money
Was
is
there.
just
Yeah.
with baby
I think
boomers of
somewhere around
US.
15%. Yeah. It's
50,
crazy.
which is
Yeah.
insane. Just because they didn't touch anything in the real estate
Yeah.
space.
Oh, business idea for baby boomers of USA. That's a big market.
Or actually, from what I know, the people who made most money on Bitcoin are actually the ones who don't have their keys.
Who
They
lost
can't
their
access their Bitcoin just since years. They've made the maximum
Exactly.
money on it.
Exactly.
Yeah. No, but I like to also bring up a
That's
a common thing that's happening with millennials right now is real estate. That real estate is literally getting out of hands. That it's out of the roadmap also of a lot of people who are making a decent money for the next 10 years or
Because
15
it's
years.
unaffordable.
Yeah, because of the unaffordability factor. So plus I think there's a change in behavior of owning a property becomes a mark of standard. Like, so what are thoughts about it? That do you think owning a property is becoming practically more and more impossible?
I mean, I shared in a couple of pods back that fractionalization is going to increase more. I do not believe in owning a whole of something. If the idea was that if I'm not fixed to a certain geography, then owning something for the sake of owning it doesn't make sense. So that's why fractional ownership is going to kick in. What if I can fractionally own places in 6 different geographies instead of having one full property in a certain geography? So I mean, fractional ownership. That's why a lot of companies and startups are coming up, which gives you possibility to own a property in fraction and then make money out of it, either by rental yield or when it gets sold or
Yeah.
whatever. So that's.
But there's a lot of cultural things. So I know culture in India and at least China is pretty much similar.
Yeah.
That people do seek that owning a property is so important for people to get married also.
Yeah,
Right.
for the boys, yes.
For the that the
Yeah,
family
because
should
it's a-
have.
It's a status of wealth.
Hmm.
So I'm completely opposite in this sense. Like, I believe real estate as a store of wealth is a great way to save wealth. Like, let it be there in an illiquid asset. It will definitely not be liquid. The rental yields will be not more than 2 to 3% on a general average basis. But I also feel is that you can do very smart store of wealth with respect to real estate. The land on earth is limited. We can go and build colonies on Mars, but to make a paradise on Mars is definitely going to be post your generation, for sure. The cities always expand outwards because of the growing population of metropolis.
Yeah.
Picking your spots right on the suburbs, where once the cities actually encompass or engulf those suburbs, that actually leads to a lot of price appreciation. So, although illiquid, but I wouldn't say it is a bad asset class. It has been the best asset class since hundreds of years,
Yeah, absolutely.
and it has definitely worked out. You can see the most common example in Europe, London.
Yeah, same.
If you would have got a small piece of farmland in the suburbs of London back in 1800s, you would be a multi-millionaire today. So that has definitely worked out because London has like outgrown its land capacity.
San Francisco, New York, any of them, even Delhi for that matter.
Delhi is not the same.
Yeah.
Mumbai is the same.
Yeah.
All the Thane, Navi Mumbai
Bangalore.
area, Bangalore.
Whitefield was a farmland.
Yeah, so on that point, guys, how does location play as a factor in wealth generation or creation? According to you, where depending on like where a person chooses to live.
Just covering to the last point, I think that industries that whatever are in Delhi right now or whatever in the cities, they will have to move out because of the climate change, right? Because of the pollution increasing in. So though the rules will keep on easing down to allure the voters for a while, but it can't be for a long time. So there are a lot of industrial parks being developed on the borders of the cities, and investing them on is an important part.
Perfect. I think we'll call it a day, guys.
Yep.
Yeah. Thanks a lot, guys. Please like, share, subscribe, and comment as well. And do not forget, there's a new addition to press the bell icon. So whenever our new video comes, you will get a notification. Thank you so much.
Thank you guys.
See you on episode
Looking
21.
forward to your views. Bye bye.
Yeah. Bye.